Welcome to Chai Pe Kharcha, where we have conversations on personal finance among four NRI professionals working at tech firms. Think of these like water cooler chats you have at the office. Only this time, you will have Ishan, Madhvesh, Rohit, and Siddharth as colleagues you will be listening into. Before we get started, a quick disclaimer. We are not financial experts. The content provided in this podcast is for informational and educational purposes only. Always consult with a qualified financial professional if you need financial advice.
To another episode of Chai Pe Kachcha. Today we have a guest episode featuring Mr. Vinod Kumar Singh. He has close to 30 years of experience in the Indian stock market. Let's dive into it. Welcome to our Chai Pe Kachcha podcast, Mr. Vinod Singh. Can you just start with a short intro?
Thank you. Yeah, sure. I was not knowing that you have also named it as Chai Pe Charcha. Nowadays, many things are starting at Chai. My name is Vinod Singh. I'm based at Bombay. I did my engineering in 86 from NIT Allahabad, mechanic. After that, as the usual, people used to go for job, and being mechanical that time was assumed as a hardcore engineering. The industry, I worked for 10 years in it. And India almost by 2000 was still struggling, but they survived after this 2000. Then I thought that if I continue here, the rate of our income has to go. That is the reason I was thinking of going to Far East country or maybe Western side. But then Europe or America was too difficult for any basic. So I went to Africa all the time, almost 96.
Mhm.
After that, 12 years I was there. It was a, Indian based in UK.
Yeah.
And then they had plants all over Africa because as India was in 1945, Africa was in 1990 like that. They have a lot of minerals, but they don't know what to do. Others come, excavate, make money.
When you were in Africa, okay, you want to increase your income obviously significantly.
Yeah.
Were you earning more when you were in Africa compared to when you were in India?
You see, when in India at that time, to get 5 lakh rupees annual income was a huge thing. I'm talking of the people who are at the age of 25 to 35 in that bracket. Those who are engineer plus 7-8 years experience. 20% of the total appointment will be like that. But the 80% goes in just 3 times. So 3 times the basic idea is what you are getting in India, you save. Plus you get living expenditure. Plus you get another opportunity of saving.
Right.
Based on saving, you can do some more investment.
Of course.
So that was the idea at that time. So after working for, say, 15 years there, by 2010, I thought now education is also important to the children. The country is not that well developed. So when the children need education, you have to either send them to India or Europe. So Europe, if you are sending me, you are taking a liability for another 10 years, where you will take time to, but that way India's education is the better. So that is the reason I moved to India in 2010.
How should one plan for their investment journey, or how did you plan for investment journey as an NRI?
Monthly earning. That is the balance point where you have to come out. Once you are out of college, say you are at the age of 25 or between 30, you have a source of income which is salary. And you have outflow as expenditure. In this outflow, if you can save 30% in the beginning, then you will have some accumulation of it over, say, 5-10 years. This 25% accumulation will give you some extra cushion in the income form. But it will start to show reflect only after 10 years. So you have to accumulate a good amount of wealth so that your income gets substituted. Once I thought that my money is idle in India. Like when you are NRI, what you do? You come here, pump your saving, which is say 30 to 40%, or sometimes even 60% of your income. Park it in the bank, and the bank gives you hardly 3%. Whereas inflation is 6%, plus bank interest is out there 15%, so you get basically rusted by another 10% every year, the money you keep in bank. By that calculation, I was assuming if I'm able to get second source of income, not by salary, in the form of investment, I can take a risk of earning this capital, which is in the bank, to give me another 30%, if not 30, 20, if not 20, at least 15. But if you are able to generate 15% of extra, then that will give you mental peace as a source of income, replica of your salary.
Right.
Like, I'll just give you an example. Out of 100 rupees yearly earning, you are getting 10 rupees. But if you are able to generate at the age of 40, 45, after your saving, say 35 rupees, yearly. So which will give you extra leg of at least you have to keep taking options and risk for the rest 65 rupees only. Once you cross that, what you get transition fees of, say 3 years, once you have overcome it, you can take more risk.
Right.
Now, investment to which categories is very important. So anyway, what I have given you is just my background in the sense, out of 30 years, I divided, once you are out of college, 25 years plus 30 years. That is the life has given you. That period is fixed. In this 30 years, if you want to play 10 years for the beginning, because you have to make base. Either you become engineer or you become businessman or you become somewhere where you have skill.
So, sir, when you were in Africa, you mentioned that you were able to save all the money you were getting in India, plus you were getting.
Oh yeah.
So, at that time, like 90s, early 2000s, obviously information was not as easily available. Internet was not so prevalent that you could just tap a few buttons and make an investment. So, at that point of time, how did you make a decision around where to invest, how much to invest? How did you find information about investment vehicles?
That time, even the communication or the call is not available before 2008, because the call was so costly, international call, that you can speak only for 2-3 minutes and the charges were almost 1,000 rupees today's. So communication is very difficult unless you give physically your own presence. That time travel was also very restricted. You get hardly 1 month in a year where you can think. By the time you understand, you have time to go. So you will not have energy to talk whether I am satisfied to do this investment. So there is a lot of gap, which one has to understand. If you are out in that time, it was very difficult. What I did was, I was allowing my capital, which was saved there. As you are getting 70% saving, you can earn good interest by bank only, and which was safest source. Because if you give to somebody who can give you 2% at that time, they were traders. But risk is the whole capital will be vanished.
Right.
Only problem outside means you have to have only, but by 2000, some network has started. After this era of what you call Y2K problem, once it was solved, 2001 and 2 became communicable. In UK, the Skype was started at that time, 2001. So we were able to communicate even through Gmail, Skype, Hotmail, Yahoo, and through our Indian banks. And the ICICI Bank was the first who started, their all you say banking characteristic, which was the best. At that time, other banks were not able to understand.
Wow.
Like SBI and all that, you have to have physically everything. But at that time, ICS slogan was that you don't come to bank. I will come to your house and that's all. Any service you want, I will give you. That is how the extra fund started. The loan part was getting clear. People who wanted good loan, if they have good record, they can get. And that time interest rate was almost 11%, 10 to 11% in India. Savings. So it was a good money to keep in bank.
Right.
Because 1% per month you were getting on a white, and that too, if you are NRI, it is tax free. So it was good. But the interest part started decreasing after 2005. When the government's plan are there now, in that scheme, they started offloading a lot of easy loan scheme, where for infrastructure like housing or industry setup, people used to. So that is how the interest rate then started getting slowly lower. By 2009 and 10, it was 7-8%. The lowest came to 5%.
How did you plan the different types of investments that you made?
That time, just I will explain you how the things start for a new man. If somebody is outside, if he comes here, people will say you buy gold. Okay, you go for bond. And basically, First, I tried all. That is some X portion, say 20%. I have invested in property. Then I went for equity. Then I went for even, there were a lot of ETS, mutual funds, and then, lot of other things involved in the bond also, where you think sometimes is such that you always be happy to get, okay, 20, 22%, 30% return. Mutual fund, lot of schemes will give you that information. But it is difficult to understand their logic of representation.
Right.
See, they will say out of 100 rupee investment, your value after 3 years is 130. So the percentage they will highlight is at 30% appreciation. And it is over a period of 3 years. Calculate it or analyze.
Correct.
In marketing, people will not highlight the negative part of it. They will not even talk of it, or they will not allow you to even sense it. But they will highlight only the interesting part where your mind will just get attracted and their source of money has come. So compared to, looking at all the offers, there will be a lot of attractive offers. But one has to be very safe. For first 3 years, I was only looking where to go, where to search. I was reluctant at time to do a job because the job is again a full time. While this activity requires a lot of research, your understanding, paperwork, calculation. Sometimes the system or software will give you good calculation, like your trade, purchase, sale, profit. But unless you keep cross-checks, you don't know that they have charged you 5% brokerage. There are a lot of variations where one has to keep track. So I was more comfortable after 2014. Luckily at that time, our government changed my all investments were as return expected, they were about to give. Tell you how I started it. Basically what I did, like gold and property are the better investment where you cannot be a loser. It will not be a negative at least. You're sure of. Third is the equity where you can take select stocks and other things. Out of 70%, you put 35 to 40% in good script, say 5 to 10 numbers on assuming that infra is good, realty is good, automobile is good, banking, finance, like that there is a chart. So out of 40, then I thought 3 years working that it is not advisable. You cannot track it. In fact, you will get mad what has become when.
Right.
So I reduced it to just 5 to 8 scripts. And I said, I'm not going to look at that forever. Because if you have a good company and you know that they are performing annually at least 15% of their turnover, once you're sure of it, and of course good management, you can keep 8 to 10 script maximum and forget it. 30% of your saving at the age of 14, like that. And remaining, I was doing trade in the sense, I don't stick with the stock. I don't, he's like not my family. If he gives me 1%, I will exit. And if he gives me 3 times 10% in a year, I'm happy to take out again. So it's like a churning. Unless you make profit, you cannot raise a capital because you have to make your capital free at the end. Like 100 rupee, you made 30, that 30, 100 becomes 70. Then from 70, you generate another. By the end of 3 years, you should be able to make that 100 rupee free from your capital so that you can utilize it somewhere else.
Right.
And then you can sit peacefully in that stock because your value is zero for it. Unless the market gives you that, the price you will see is not a 45-degree. The price will always be in oscillation. Once you are master of calculating what is my appetite, we re-enter and exit. You have at least 1,000 scripts in the market to do that. Once one able to decide what you have to do it on a Saturday, and then Monday you can just do few trades and close. Not that 25 hours you sit on screen. Because you are aiming for at least 12%. After brokerage and all that, it goes 1%. At least you will save 10. And you can happily pay taxes also.
So, how much money or what percentage of your money did you put into equity versus gold versus real estate versus fixed deposit?
70%, the remaining 30, 5% to 6% is only gold. 25% has to be on a real estate.
Hmm.
You should not be having a house which is on rent.
Hmm.
So you invest 30% of it on a property. You are on a salary scale. Your 30% goes as a rent. If you are in Bombay, Calcutta, or Delhi, please, 30% is your HRA.
Right.
Okay. So that 30% you have to make it null and void. That when I'm living on my own house, I'm not going to pay any rent.
Hmm.
So that is the best investment when you come back, or somebody is having his own house, or you want to have a good house which will last for 25, 30 years.
Hmm.
So family expansion, other people take care. So that 30% you have to make first good investment in that, which is one time and forget it. There are options. People take loan at the age of 45, but loan are you pay. So from your 70% earning which you are getting, your loan EMI will.
Correct.
So I was very happy that I didn't have. I had full option of if I can generate my 12-month expenditure from this 70%,
Hmm.
I'm meeting the bank interest. Because otherwise, this was giving me only 3%.
Right.
You get me?
Yeah.
And then 3% is a idle money, and which was every year by paying taxes and so many things,
Hmm.
you will find that buying power of that money is diminished.
Hmm. Exactly.
If you have 1 crore and you are getting, say, 4 lakhs or 5 lakhs tax free
Hmm.
interest,
Hmm.
which you say your income.
Hmm.
If you invest 1 crore, if you are a smart investor, there is a range you can generate 12 lakhs and 30 lakhs.
Hmm.
Okay. So forget about 5 lakhs. Even if you pay on this 20 lakh, say 20% tax is the expenditure. तो आप ये आपका 15 लाख जेब में है.
Right.
And this 15 will give you another cushion for the next 1.15 crore to play.
Hmm.
Okay. By the time 4 years has passed, you will be realizing that I have generated 50 lakhs my cash.
Hmm.
So I'm just giving you a picture on a will not be significant.
Hmm.
But if you are doing it at the level of say crore or
Hmm.
50 lakh, but that confidence you have to get where I enter, where I exit and do trade. So at the age of 48, you are able to calculate that I am able to generate my expenditure first from my investment. I will not work.
Yeah.
I don't need to work for somebody who is
Right.
giving me only for living expenditure. So your income part, which was at the age of 25, was only supporting to your expenditure plus
Hmm.
saving.
Hmm.
Today, that income, the salary part, is replaced by your investment
Rest.
and it's like money attracts money. I'll
Hmm.
just tell you, 100 rupees at the 20%, annual appreciation
Hmm.
will become in 5 years, but say for 10 years will become 700 or 800.
Hmm.
And same money, 20%, when you are reaching at 15th year, it is 2000. And when the same money at 20th year has given you 5,000 rupees.
Hmm. Right.
I'm just giving you an example of a Titan company.
Of course.
Titan company was 100 rupee in 21. I'm just calculating all the calculations of their split and bonus.
Hmm. Hmm.
Today it is 3,700.
Wow.
Oh, and in 2020, the price was 2,000. That's why I'm telling you that 100 rupee, 20% calculation interest is such a big amount
Okay.
because our number of years. Bank is giving me 6%.
Yeah.
I can happily sleep on it.
Hmm.
But bank gives you only 6 after TDS and nothing else.
Hmm.
Here, your appreciation of return is getting accumulated in the system, and then the yield is much, much. That is one has to feel it to sense it.
Hmm.
You will not calculate, you will not understand, even though you are a good at mathematics. The figure of 5,000 in TV against 100 rupee is a huge difference. And somebody who misses the time, misses the opportunity, tried 10 good companies, 2 or 3 will click like.
So let's take an NRI who's maybe 30, 32 years and has a savings rate of 60%, who's still an NRI. So how do you suggest him or her to deploy that 60% savings?
See, 30 to 30, ideally, first he eliminate a house. A house you can buy at the age of 32, you will not be able to buy at the age of 45. Even if you don't want to stay, first investment of saving should go to a good real estate. Because ultimately, you know, in 50 years, my father was one person, right? But 50. Today, on 50 years, we have become 50. So population keep on increasing. That is why the demand will. The earlier you have your future need of house, the better you are on the price part. Only the price will, like today you are able to live in, say, Chennai at a prime 3 level. So you can always think, "Yeah, I will move to prime 2. If you take out this 10 years before, you will be able to give a pricing at prime 2 area where you can have more space, you can get some rental income, which is 3%, which is not bad. At the time of buying, you will have loss of at least the 3%, the price will be 4 times. In 10 years, the real estate price sometimes goes between 3. If you are at the age of 45 and you are looking for a house, that means your savings, major portion will go there. So where to talk of creating a investment return, you will not be able to generate. And then you are left with only a job profile where you think all your expenses will met from your salary. The idea is that by 40, 45, if you are able to cut off that salary remark by 3 ways, that is your return on investment should come and you should have that 30% HRA which you don't need to pay, which was part of housing. At this age, 32, before below 35, you must invest in real estate. Although you may not require it, but it will give you, is like a gold only. You sell it, you get cash. And if you are having a prime area, although you may not be knowing the area better, but look for level 2, level 3, zones. Like in your Madras, Chennai, I'll just give you, near Central is the prime area. I think the main road is MG Road, or they call it, what is the road? Yeah. So go for where your budget can do, provided you have enough savings, or even if some portion, say 30%, you have to take loan or something, but you will always overcome that loan back.
Okay, so
If suppose you take 1 crore loan, you're paying
मतलब 60% से आई बॉट अ हाउस, तो अभी मेरे पास और 40% बचा है, तो फिर
and you don't see any area where you have to come as emergency. Like once you have house, the third party, you are good health, you don't have any extra education expenses or even child or so you go for equity because equity is the right thing. Also, people say you go for F&O trading, or there are other products where they say it is a weekly trade, monthly trade, index trade, ETF. Go for delivery ads where your demat account will be credited with the equity shares and sleep. Just forget it. Don't look at even monthly basis because once you have selected few scripts, it will perform you after the year. And you want to be more cautious. The ideal is don't invest at one. Invest in first quarter 6, then third quarter, then again after 6, so that you average the price. Once you are done with that, 2 years are enough to put your money in the system, which you will see only now. And once you are able to give weekly 2 hours to check your status, now there's banking and there's 3-in-1 account. You don't need to go for broker. If you have your demat account and saving account, but all these logistics are transparent and clear. Whereas if you go to some broker, he may give you at the lowest range. Sale will be at the lowest range and purchase will be at the highest through banking, ICICI, HDFC, or even all banks they offer. US Bank also they offer these 3-in-1, which is safe. NSDL and exchanges are all under this Aadhaar, PAN link, so that everything is with PAN.
We also have options to invest with outside India. Like it is possible was say take 10% of our saving and skip it in US market or Asian market, China, this, that, whatever.
Yeah,
Me to India and invest in the Indian equity market. Thoughts on how we should think about
See, there are markets in Brazil, like India and other developing countries, but then the law, the taxation part, the banking part, every country is different. If you have to invest in Dubai, there is a separate law. How you do banking, what currency changes, and other things are. So that return-wise calculation, if somebody is having too much of cash, where he is saturated with Indian return, yes, that is good as an option. But then you have to again expertise yourself to look whether you are not going to get trapped on the false information, because always the false information will be more conveniently spread than the real gap is unsafe. The safe is, why I tell you India, two things are better in India. One, as the governance has become. So companies are willing to perform with transparency. There is no cash part involved in the business where so all the era has gone. So once that is true, your investment is safe. And India will give you good return as compared. All the three combined, anyone you take here of South Africa or Brazil and all. Because here the government stability is more important. And once it is, we are sure that we are the time, how beautiful we are. So you can take a risk for that. You invest that extra money in gold because you are thinking what is the another option. So first option, I tell you, go for a property. Once you are satisfied, go for equity. Once you are satisfied, go for gold again, go for property again. You can do this low. Continuing, you are able to make that survival cost benefit analysis and you give you return of 20%. I tell you, if you are able to generate 20% every year, just don't aim for another peak. This will itself generate a huge amount, which will cut off your requirement to high inflation or demand supply gap. Once you are able to meet this, you are sitting on top of the.
Yeah. So what should be figure that one should aim at present in terms of return?
Mainly, what I tell you, at any age, if you are having a salary, say, I'm giving you in India 10 lakhs, okay, and you have investment made, which will generate more than 10, you exit so that you will capitalize your money. That is straight. Now, age factor will come. At what age, where I should get cut off? Okay, like you are at 45. You have liabilities of education, you have liabilities of medical expenses and all these. So I will tell you, seeing the present circumstances, when you are at the age of say 35 and you have the 25 years to perform, where you can generate your own salary revenue. If you are able to sit on money which is 10 crore today, you can generate that without keeping in the bank for your investment, and next 25 years, you will make this 10 crore to 40. But if you don't make it sitting in the bank, this 10 will become 20 maximum. But then another 20 which you have generated, it has not given you satisfaction. Plus, it is a risk appetite. Market is risk appetite.
One last question before we wrap up is around post-retirement life. Like now you are at a place in your life where most of your liabilities have been taken care of. So in terms of expenses, if you are comfortable sharing a number, what is a good life?
See, yeah, I'll tell you. If you have your own house, you are not paying IRS, right? Otherwise, if I assume that cost also, that you have to pay rent, you have kept money in the bank from where it is coming. So that is another way of calculating the income.
Right.
If you have that, then at present, well, you can have a very wonderful life. 20 lakhs expenditure you plan per year, where you can do 5 to 7 lakhs is your cost of supporting, and 1 lakh or less average I am giving for your maintenance. Maintenance includes your medical, traveling, plus few lakhs I am keeping once for your destination travel. I want to have some Europe tour, Dubai tour, and
Right.
you cannot be placed at 12 months one place. So you can be moving. Well, that's 2025 maximum. Empty I am giving you average.
Thank you very much, sir, for participating in our conversation today. I think we all learned a lot. Thank you.